Welcome to Digging into the Future. Today we have Richard Lukaj, one of the longtime partners of PTC, one of the great bankers that's been here through many years. Played a lot in sort of the middle market, which now has become the big part of the market, and data centers and digital infrastructure. I think one of the first bankers really to kind of recognize it even 15, 20 years ago. I know I'm dating you a little bit, but a fantastic history and always a great guy to understand what's going on in the industry. He's always got his ear to the ground, and so we're really happy to have Rich here today with us. So welcome aboard, Rich.
I'm delighted to be here, and actually your timing is a great compliment because it's been more like 35 years.
We're hopeful. Everyone, I think all of us want to see the world more peaceful if we can. It's especially our generation has seen a lot of wars around the world that can be disruptive, and so I think as we start thinking about Asia, what's your thoughts on Japan? I mean, I think one of the things that we've seen is for the first time there's been a huge focus. I think really actually largely from the data center community, sometimes because of power, and really the idea that there's only maybe 2 or 3 markets in the region that can do these massive deployments, right? So I think, what are you seeing in the U.S.? Are you seeing a re-emphasis on looking at Japan and sort of seeing it as the kind of moving back into a central role in the region, or what's your thoughts? Sure.
Look, I think I wouldn't limit it to Japan. I think there's markets all over the world now where the big purveyors of data resources are looking at their macro global style strategies, and the topics you raise are the ones that are necessary, which is if you're going to have a concentrated power consumption model that is squeezing against or competing with society for energy resources, where there's going to be an imbalance, those become less interesting markets in some respects, and you have to find new places where maybe you don't have as much of a challenge in those priorities. And it's going to be also a question to the political sphere. What energy do you have to modernize and provide next generation data infrastructure versus providing basic necessity to your communities? And even in the U.S. we have phenomenons where in some markets we have companies and homeowners and general society enduring brownouts and having power shortage concerns, while at the same time providing uninterrupted power to the data center ecosystem. And those two have got to find a compatible existence, and that's the natural way of things, and that's what public and private policy folks are going to be discussing and figuring out how to navigate. And it is a high priority issue, and I don't think one side or the other of that argument is easy to take. I think there's a compromising reality, which is over the next few years, as the trajectory of data infrastructure grows, and the consumption of power and other resources is a necessity part of that, that people are going to have to reconcile with this new reality and decide if they want to be in that world order or they don't. Yeah. Or there's somewhere in between where there's a useful case.
Well, and I think I think a lot of people that I've been talking to in the last couple of days have been reacting to. There was a map that was put out that basically named the places that GPUs could be shipped to, and in the Asian region, it was basically Japan and Australia and New Zealand, and everything else was in the bad category. Yeah. And so it is sort of interesting. I think it's I've seen a lot of reactions this week of people going, "Oh my God, what's going on? This is sort of crazy stuff." But I hope that it sounds in your view, and I think sound minds hopefully will prevail in this, and we'll start to get to.
The GPU topic is another interesting one because I think in some respects the short term relates to the supply-demand dynamic, which is going to change. There will be more diverse providers, there will be alternatives, and I think in the chipset wars, if you will, there's going to be continuing attraction of capital and competitive tension to provide perhaps a more competitive realm in that arena. And that too will have an effect on the ability to sort of define markets with a particular supply-demand dynamic. I think that is also unhealthy. It's not a methodology that that ought to prevail for very long. But I think these are kind of interesting things to think about as people think about step functions, improvements in technology, and how they can obfuscate the marketplace and in some cases really disrupt the ways in which people are doing business within it. And I think we're going to have some elements of that to contend with as you think about not just the infrastructure layer of the AI generation, but the applications layer and the human interaction layer. And there's going to need to be, I think, some tools built or some methodologies and practices put in place to make sure that we understand the intended and unintended consequences of these evolutions, and making sure that we're taking a responsible approach to it. As even the broad strokes of things like social media and other things have now pervaded the world, and at the same time we're now seeing some consequences of that after a generation of employment. These things are now being determined to have influenced our society in ways that we didn't always intend, and we're finding our social world in real life also dealing with the consequences of what the virtual world is doing to us as individuals.
It is kind of interesting. It's and it's also it's created this faceless world where you could actually send things into the ethos and, and sort of try and influence people. No, it's but let's go. I mean, interesting concept, because I think one of the things I've been exploring is if you look at the chips, like NVIDIA's, essentially become one of the most valuable companies in the world, right? Overnight, right? And largely just because of exactly what you're saying. There's a supply and demand issue. Well, you could argue that's also going to play through to things like fiber and electricity. And the interesting question is, you think you'll start to see valuations in power companies, all of a sudden, power generation? You think that's going to go sort of off the roof, up into the? You see that?
It's already been happening. I mean,
okay,
the values of power companies have improved dramatically over the last year or so, and I would also say that the orientation of power infrastructure providers towards thinking about how they play increasingly in the data ecosystem. I think this year ahead is likely to be an environment. We're involved in a number of situations where you're going to see the convergence of those kinds of infrastructure and integrating within a project, both the power sourcing capabilities as well as the data infrastructure side. Those kinds of collaborations are somewhat natural, because if you think about who the leading investors have been across the data center ecosystem in the last 5-10 years, it's the same people who have historically been involved in other more traditional forms of infrastructure. So as those knowledge bases converge, it's very natural and logical to have discrete projects that solve for all sides of that infrastructure sphere. But the other important thing that's solved with that orientation is it's not, in many cases, competing with existing power resources that are in scarce supply as it is. It's actually creating new capacities that don't conflict with traditional resources. That won't be discrete in that perfect way in every instance, but I think it is a fascinating way to think about how the industry is going to continue to evolve here.
Yeah, it's almost like you're talking about capital unlocking. It's unlocking capital. There's certain new, what I call unlocking capitals, and it happens to be like, that's nuclear power, or it's hydro over here, that the business case never really worked for the power company. But now when they say, oh God, I've got this massive data center that could take down a gig.
That's right.
Oh, okay, all right, now we that capital that didn't look like a very attractive investment now opens up this other asset that's going to be very valuable. So it's fascinating, because it's sort of like a daisy chain that we're seeing in terms of investment, right? So it's you have to have this to get to this, and you're valuing this based on what you're going to get over here, right? Which is it's an interesting.
I think that's right, but I also would say that it's a fiery demand. It's not and when the opportunity presents itself in scale, folks, particularly on the power provisioning side, are pressed hard to figure out how do we, in relatively short order, competing for an RFP that is finite. If we don't win it, it's going somewhere else. So, in that reality, everybody's pressed to try to find an alternative. So it does put pressure to reconsider all kinds of power alternatives, and look, these projects require large swaths of land. They require power consumption. In many cases, they also require massive investments in interconnectivity with these ecosystems because they don't live in a vacuum. And so, orchestrating all those layers in many cases is a great feat, but exciting to see the U.S. actually leading these initiatives again. As in fiber and in some other spheres, I think the U.S. had fallen behind a number of other leading economies in the world, and it feels like we're back, and particularly in the tech space, particularly in the last few years, I would say 5 or 6 years, it felt like a really concerted and energized effort towards enhancing our digital infrastructure layer.
Yeah, no, it'll be interesting though, because it seems like you're going to start to see, you're almost going to be pitting cities and countries against each other. I mean, it's going to be, in some ways, right? You're going to have guys just, because you start thinking about smaller countries that say they have, 1 million or 2 million people, yet they've got a massive amount of power.
That's right.
This can be extremely transformative, right? I mean, this may be, because you start thinking about the economies of those countries, you could be doubling the size of the economy with just one move, right?
That's
Which
right.
is we build this data center, boom, we're into the next, and with nuclear, it pretty much could be anywhere, right? I mean, it doesn't. There's no geographic. I mean, I guess there's the transport issue, which is the fiber to be able to get from point A to point B.
Yeah. Well, I actually thought you were going to mention a place like Iceland.
Oh, Iceland, of course, is a place close to my heart. But
exactly. But I think the reality in places like that is it's not just that they are power rich; they are green power rich, and it's a highly sustainable solution for power, and in some respects, I liken the resource of that nature is akin to like the transformation of Norway through its fossil fuel equivalents. And so, if these economies that are blessed with an abundance of green energy resource can figure out how to create a formula around it, it will be transformative to those economies. It will be absolutely an annuity stream that we can actually, in many cases, sustain and support and provide wealth to those societies. So I think there are places around the world that are blessed in that way. Just as they were blessed with reserves of underground oil, this is reserves of underground or other forms of energy production. And if they can tap into this wave of activity, I think they would be long-time beneficiaries of all of what's to come.
Yeah, no, I think it's amazing because you think about it. This is what in the 20s and when people started finding oil, like in the Middle East, right now. This is the new oil, right?
It's a discovery. That's right. That's right.
No, I mean Iceland is one of the ones you and I have talked about a lot. Sure. But I mean, you think about Iceland, it'll be just the power alone. If they were to bring in one of these hyperscales, it'd be $100 million to a population of 300,000, right? So that's a lot of money to bring in for a small country and a small population. So it's amazing how, and that's every year that population gets that can be spent on healthcare, on education. And that'll be transformable to some of these countries. And I'm sure that's how like some of the Switzerland and some of these countries over the years, when you have an outsized industry that actually is very profitable, the whole society really does benefit. So I think
exactly right.
So I think that's one of the cool things about AI, and sort of as we start thinking about these bigger deployments. So talk about the banking side. I mean, one of the things that we all look across the landscape, and some of these assets have become just enormous, right? And then there's some of them that have also aged. We've also seen I won't mention any names, but there's a couple data center companies, for example, that were struggling actually to get funding, right? That were built in around the vintage 2000, 2001. And, there's different products that are coming out now, and some of these, they're finding difficulty finding investors. So there seems like there are some dislocated assets, both at the top end and then sort of at the bottom end. So it's interesting. I mean, what's your thoughts on? I mean, are we going to see distressed assets coming into the data center space? You think, or?
I think there will be few and far in between. I mean, and the data center ecosystem has evolved quite a bit from the early '90s vintage, which was predominantly hosting and remote hands kind of an ecosystem. Think heavily services oriented, to today where we have really a rainbow of spectrum in the ecosystem, from super hyperscale, dedicated single tenant, investment grade, counterparty offset, those look like project financings. Those don't look like, to the finance world as services businesses. At the other end of the spectrum, you have, highly services oriented, high customization, enabling enterprises to, in many cases, enter the cloud and ecosystem that enables their businesses into the cloud ecosystem. Those are services companies, and in many cases, they don't even need to own their underlying real estate where they provide their services because they're dispersed and they're not highly concentrated, and their customer base tends to be regional or national in many cases. And so those businesses are adjudicated like services companies, and those maybe have different value characteristics than let's call it a cap rate model for a more of a hyperscaler type proposition. But each has access to capital. And there's many in between that do sort of larger scale wholesale, multi-locational type plays in the middle. And some are actually national, and some are multinational, and some are global. So there's in the massive data center industry now, a lot of different ways in which you can participate from a risk-reward perspective. And I would say sometimes people misinterpret that because the services industry gets a lower valuation on a multiple basis, that somehow it's less enthusiastic. It's a big and growing ecosystem in its own right. It's the most mature. It's been around 25, 30 years now. But at the other end of the spectrum are these step function dynamics that grab all the headlines because it's 10 billion, it's 5 billion, it's 100 billion commitments to portfolios of assets in that ecosystem, and those grab a lot of attention. But the return picture there is actually considerably lower. They're high intensity on the capital side, and the ROIs in those projects is actually considerably lower than the required return in the services side. But it's just a question of where do investors find the comfort zone.
I think we could have gone on all day, Rich, but
and we can.
but it's been a great opportunity to have you here, and obviously you've been a great partner to PTC, and you've been here all these years, and actually probably one of the first bankers really to kind of really come here with full force and really, I think, appreciate the opportunity here. So really do appreciate your time and your insights, because I think you're always with your finger on the pulse, and so it's very helpful, I think, to our members and viewers to sort of get it right from you. So thanks, Rich, for your time today.
Well, thank you.